Good evening. Welcome to the ShadowTrader video weekly for Sunday, July 16th, 2017. About the midpoint of the month here. Things going rather swimmingly, I would say, for the majors. You'll notice if you're looking at this at our site, the first item up for bids, so to speak, is that the weekly charts of the majors are showing higher. So we're going to start with that and switch us over to a weekly. Before I do that, though, I will just point out that the breakout occurred this week in the S&P, and I say breakout because this is breakout of a downtrend. And what's also important is, and this is what you can tell all your friends that are like, when's this market going to come down? I can't believe it. It just goes in one direction. It doesn't make any sense. It's been a long consolidation. Do you understand? Like, this is building momentum. The market hasn't gone anywhere in a very, very long time. And same as this situation here. You have this. This is a very long time. And the market is basically just digesting this move, right? So then you have that. You break out. You make another move. We had this false breakdown. That also is very bullish, but when you retrace 100%. So that really kind of screws the shorts up. And as I've always said, you would think that when you get to here, nobody's short anymore. But it doesn't really work that way. You can see it's very typical. You have this sort of crawling up action, like they're still short. They're still short. Now it's coming back down. Oh, good. It's coming back down. Oh, it closed here. And then here. Bam. Oh, geez. And it's just like cover, cover, cover. Right? And there's all the short covering takes higher. And then you balance again. And now we're moving up. So we did break out to a new all-time high in the S&P. And again, as I was saying, I do want to focus on the weekly. So let's look at that. So weekly on the S&P looks pretty good. You notice that in terms of the current leg up, it's the first week higher after consolidation. And one thing I wanted to point out is that there's a similar number of weeks here to the last time. I mean, here you have about 5 to 6 weeks. This is 5 weeks here. Look at this area here. It's about the same, right? 5 to 6 weeks. So it's very common that the market pauses like this amount of time before moving a bit higher. So S&P looks all right. I think the real focus is on the NDX and the Russell. And the reason I say that is because notice that you have this classic 100% retracement here. And what happens is generally it just doesn't make sense that you'd have another weekly bar down. You could, anything can happen, but usually go a little bit higher. And if you recall, in past videos, I pointed out that the NASDAQ was coming into resistance right here. And it turned out to be the perfect call because that then kicked off 1, 2, 3, 4, 5. Again, the 5 to 6 week consolidation. 5 weeks of down where the NASDAQ worked off all that froth. And one of those weeks was a big ugly bar. Came down to support here. Just missed it shy of it. Actually came in a slightly higher low. And that big ugly bar has now been negated and you have this 100% move. So as I was saying, the odds are usually that even if there's some sort of a pullback, it'll go back, it'll retest this again. And you probably go a little bit higher. So I expect a little bit more in the NASDAQ. And we're also coming into earnings season for those stocks, which is going to kick off in the next couple of weeks. Netflix on Monday. So a lot of these NASDAQ 100 stocks are about to do their thing. And if the earnings are good and we have gap ups, then you can probably expect that NDX is going to push a bit higher. And last but not least, the Russell. I'm going to be watching this one closely because it is coming to resistance, but it has a little bit more to go. And this is actually interesting because certainly it's not a short here where you've got a little bit more to go. I'd say you could probably do a short-term short here, maybe in the Russell futures, but also pay attention to the fact that this is a channel, and now you have 1, 2, 3, and this is going to be 4. And plus, you see here, these are higher lows, constantly making higher lows, higher lows. It's usually not a good idea to expect a big short there. Usually you'll get some sort of exhaustion like capitulation buying and they'll push it up through quite a ways. So keep that in mind. So Russell is also fitting into my puzzle here as far as going a bit higher. All right, let's take a quick look at the profile. I'm not going to spend too much time on it. Again, if you're looking at this on our website, you'll notice that the second item in the headlines there, so to speak, of the topics of the video is different week, same crap structure. And that's basically true. The market is breaking out here on small bodies here. You have kind of poor high, no excess, poor high, then it gets repaired. And mostly what I'm pointing out in the crap structure is the Friday action was like this, one distribution, and 2 distributions. And you've got single prints here, single prints here, single prints here. Single prints are never really good. You did get, at least you got the point of control up in the second distribution. It would be not so hot if the point of control for volume was here, but point of control did move up to here, so that's okay. All the poor highs that I talked about have now been repaired. Those were the poor highs that were inside of here in this area. All these poor highs have now been repaired, so that's done with. And the only real carry forward, I would say, especially since we're at a new all-time high right now, the only real carry forward is this gap here. Oh, I apologize, I drew that wrong. It's actually going to come from this day to this day, and that's what's known as a true gap, because it's RTH sessions that are from low to high. Remember, we measure the gaps only from the extremes, not from the close, so that's a true gap. So keep that on your charts. If at some point, and of course it will come at some point, there will be some sort of pullback, you'll look to see this poor structure be repaired, and you'll see the market probably head to this level, and I wouldn't even be surprised if it just turns around and bounces right there, because that's usually how it occurs. You just come back, fill the window, turn back around. All right. Earnings season next week. There's going to be a whole bunch of them. I just want to give you a heads up. We've got Netflix on Monday. On Tuesday, we've got IBM, Bank of America, and Goldman Sachs. Morgan Stanley on Wednesday. Thursday, some tech action with PayPal and Microsoft. All right, so this is going to be a relatively heavy earnings week, and that is, of course, going to impact what those major averages are going to do that I showed you at the start of the video. All right. Jumbotron mania. Is the love back? That's what I said in that bullet point. I believe it is. We've done very well with these stocks. I don't know how many of you guys have been following along, but remember, I'm launching 2 advisories with Scott Gillum, who has been doing a lot of options trades with me. We've been putting out our track record for a while now. We've been at this only not even that long, just a couple of months. I think the first trade was in right here at the end of March, towards the end of March, and you can see we've done pretty well with it thus far, and it's all on really small size. So these are pretty solid gains on pretty small size. You guys don't see it because the video cuts off, but we trade basically in this model account, we trade anywhere from 1 contract up to 8 contracts. So, and we try to do even numbers. So we do 2s, 4s, 6s, 8s. We do risk reversals. We do broken wing butterflies. We do debit spreads, verticals for direction. We do not do verticals generally for credit. You know, I'm not a big fan of that. I'd rather do broken wing butterfly. So we're doing some esoteric strategies. We do reverse unbalanced butterflies where we're selling them instead of buying them. We do some regular unbalanced butterflies long where we're looking to have a stock just kind of close on a Friday expiry. Really cool stuff. We're really excited about this. We've been having fun with it, and this should be going live in a couple of weeks, and it'll be pretty reasonable. There'll be 2 advisories, and they will probably be $50 each for an entire month, and that will also include 1 webinar a week. There won't be a webinar for each product, but 1 webinar each week. We'll probably do it on a Friday near the close. Our plan is to do it at like 3 p.m. And everybody who is part of the advisories will get to be in the webinar. And the purpose of the webinar will be to give out all of the trade ideas that we are looking at for the next week, basically, and also to answer as many questions as we can. It'll be a big Q&A, and we'll probably do like an hour to an hour and a half each week, and that'll be included. So it'll be kind of cool. And the trades will come out via text message straight to your phone, which is kind of cool. So anyway, working on that. The other reason I was pointing this out also is I'm talking about these jumbotrons, and I was just saying that we've done well with a lot of the stocks that are in play that have ran a lot. I guess I gotta move this a little bit so you guys can see it. But we've had BABA, and it's still open just because we have some put stuff that hasn't expired yet. So this doesn't even reflect like some of these trades. And Facebook as well, we did well with, all just directional. So we caught these moves, and we're also catching a good move in Amazon. We've got a put BWB for credit, and we're also got a nice directional play, which is this. We got a big call fly on, which is a broken wing butterfly. on the upside in Amazon, and that would be this trade here. You can see we're long the 995, short the 1015s and the 1040, so it's slightly broken wing, paid about 383. These are trading for about 660 now, I believe, so it's like it's almost a double now, so this is looking pretty good. So Jumbotrons we feel currently are in play, and these moves just kind of made sense to be part of them, and that's a lot of what we do is we look at these Jumbotron stocks to try to catch directional moves in them. And as I was saying before as well, since there's two advisories, the other one is going to be really interesting, and that's where Scott's going to be doing a lot of time spreads and longer term trades, some of which might even be like a covered call here and there, but probably not. Mostly call spreads, which are calendars and diagonals. And he's done well with these. He's done them in Facebook. He did a couple in Under Armour, which worked well. We've got one on in gold now, which is not doing so well, but it's really long term. We're still looking to sell more credit against our long calls in gold. It's an interesting strategy, and it's good for certain traders because it is less capital intensive. It's all matched up, longs and shorts, and you've got also a longer time frame. So some of those trades are good for more of a core approach, and it really goes hand in hand. I think it's important for people to have some longer term stuff. If you're just strictly trading options, have some options that are longer term that you're continually selling credit against, and then have more of like the income stuff, which is the other advisory, which will be like the weekly income trades where you're kind of clipping stuff fast with a duration of anywhere from 4 days like out to the next week. So let's say like 4 days out to like 10 or 11 or 12 days, something like that. So again, we hope to launch this very soon. Actually, I've been doing some work on the site, tuning up the shopping cart. Many of you may have noticed already that the shopping cart has changed, and the login is a little bit different. You may be prompted to change your password on the site, so just do that since we made the change. People have been saying that they've had to change their password, but it's not that big of a deal. You just change it, and it works just fine. All right, let's wrap it up with just a quick look at some charts. As I said before, some of these have ran a lot, and I don't think there's a play now. Facebook is one of them. It's kind of has made a huge move, and I don't think it's in play. But Amazon, for instance, as I was saying, we're working this call butterfly, this big one that goes from like 1,000 to 1015, or 995 actually, 1015. It's like a $20 wide butterfly, and it expires on Friday. And to me, this just looks so ripe to move to here to retest this, because you've got nice move up, and remember, the only reason the stock backed off the last 2 days is because this is a 100% retracement. And generally, 100% retracements will not touch and go right through. They'll touch and come back. And that's essentially what Amazon did. But notice that when Amazon came back, I mean, like, what kind of a pullback is this? Right? This is like no pullback. This would be like that guy from Animal House, like yelling at the chubby pledge, you know, be like, you call that a pullback? This is nothing. I mean, it didn't even move. So nice kind of balancing action here. And again, I'm thinking this in Amazon, and that's still playable. Like I said, we've got a bunch of spreads on from a little while ago, but I think it could be added to. And I may actually add to that and watch the trend line here. And if we get a break on the trend line, I'll probably buy more call spreads and add to that position to the upside. I think it's really important to kind of press the bet when you've got something, when things are going right. You've got to kind of pile into more stuff, and sometimes you even have to press the bet in the stuff you're in. You know, I often find myself after big moves where some money has been made, what am I thinking? I wish I was bigger, you know, wish I was bigger, should have been bigger. So trying to kind of get into that mindset of kind of pressing the bet. All right. Netflix is going to be the first one to report. I've said before, I'm not a huge fan of this stock. I don't seem to trade it well. I've told you that, guys. I've told you guys that before. I think it's too much in the middle of the range. It's also had a huge move here, so I don't think it's actually playable. Price line, I love. As you know, I've got some pretty big spreads in there. I'm looking for a move to 2,000. I think I showed everybody on Twitter the channel here, where I said I feel that the stock is going to about 2015, and that's this area here. It is this week here is the breakout week, and then this week was the follow-on, and I'm looking for about 1 to 2 more weeks move up. I'm looking for it to test there. I think it could. I don't think the stock has really run that far, because notice that this breakout here was at 1930, and the stock now is at 1950. And this is basically like same thing, 5 to 6 weeks. It's a little bit longer. And also what I wanted to point out is that the last time you had a breakout, and I'll show you this on the daily, if I can get it just right. No, I've got to go on the weekly. The last time we had a breakout, it was essentially 130 points. And I can't remember exactly how I measured it, but I believe it was this one here from the prior high. It's that move. So I'm thinking that once, and that basically broke out of this whole consolidation. And so I'm thinking that this move, if you start here from the breakout point, it should be about the same height, right? Same size box on the upside, and it should take you to that area. So that's why I'm thinking about 2015 in the stock. Google looks good. I'm liking the weekly where you're retracing a lot of this. I think it needs to get a little bit higher to here. Also notice that Google hasn't broken this downtrend as of yet, but Google may be a stock now into its earnings, which will be on the 24th. This actually could be in play. I'm probably going to sell some put credit in Google that goes out on the 21st here, more than likely. But it's unfortunate that a lot of these stocks are reporting in that week. I don't like to have trades before that. But for instance, Amazon, we're bullish on it up to the 21st, meaning options that expire on the 21st because they're going to report on the 27th. And I don't want to really be involved in like a longer term directional play. I will leave you with this. I will say that in that week, probably on the 26th or 27th during the day before that earnings, I will put something on, but it'll probably be relatively small. But I will do a little something directionally, and more than likely, I will sell some put credit like in here. This is a small spread that we did, and it was actually kind of an error on our part, is that we thought we were going to collect a bunch of credit selling these, not selling, excuse me, buying these broken wing butterflies for credit. And we took in like 80 cents, if you recall, on the spreadsheet, which is good for not a lot of risk. It's only a couple dollars risk here on the downside. But we forgot about earnings at the time that Scott and I were looking at the spread. We forgot that they report on 28th. So we will not be adding to that position. We will probably take it off when they report, or we will use the 80 cents that we collected. And actually, this might actually be a good idea. We'll just leave it there and say that we collected 80 cents. And maybe we'll just spend that 80 cents on a small spread here, right? Maybe something like this, 10, 10, 10, 12, 50, whatever. And we make 250 if it moves over 10, 12, 50, and it's kind of a cost is kind of zero. But more than likely, I'll also be looking at something a little bit more aggressive, probably selling puts in this area, but obviously bigger than just one contract. And whatever I can pull in, I will use to buy some call spreads or a large butterfly or something on that side. And the reason that I actually like that for earnings, even though, as you know, I'm not a big believer in earnings plays, is that I am a big believer that when the technicals are setting up properly, the gap is often in the direction that the technicals are already pointing. And so to me, coming into earnings, remember the goal is that this gets to 10.15 within the next week. Notice that this is 1 potato, 2 potato, 3. So if you have a stock that's exhibiting this pattern and it's sitting up at these all-time highs going into earnings, the odds are pretty strong that the gap is that way, because usually the technicals set up the news. Everybody thinks it's the news that pushes the stock, but it's actually the inventory position of the players and how the chart is already setting up in advance that makes the directional move happen. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I do wish you good trading and good night.